Here's today's real story. Chips just posted their worst two-day drop since last October, dragging the Nasdaq down about 1.5% while the SPX held flat. Meanwhile, the long end is firming again. The 30-year yield back near 5% at 4.98. That's today's anomaly, and we close on the #1 ranked ETF in stock from SignalFinder Pro's Best of Best. SPX held nearly flat on the session, but Nasdaq slid about 1.5%. Chip-led selling drove that divergence. Weekly structure on SPY is still holding. We printed a new all-time high just last Thursday, and the weekly candle retained a bullish close. Daily price action put up a bearish harami cross on both SPX and QQQ, but it's unconfirmed. Needs a close below the pattern low to be actionable. COT data shows large specs adding to short exposure, which keeps a short squeeze scenario alive early this week. DXY is testing resistance near 101, with no clean breakout yet. On the bond side, the 30-year clocked 5.16%, the highest since right before the global financial crisis, and net interest expense is now running at 20% of total U.S. tax revenues. The yield curve split. The short end is moving while the long end lags, and that divergence is keeping the macro picture from resolving in either direction. Energy's giving the system a split read. XLE has been tracking sector leadership while crude is sitting near 4-month lows. The geopolitical risk premium that drove oil sharply higher is unwinding with ceasefire progress. The sector ETF and the underlying commodity aren't moving together right now. That disconnect is the story in energy. Oil spiked well above $100 a barrel recently before this reversal, and that swing is what's now filtering into the broader energy picture. Gold is stalling just under resistance, and the scan isn't picking up any institutional accumulation on the up days. The volume just isn't confirming the bid. What is happening under the radar? Central banks globally are buying roughly 1,000 tons of gold per year, about double the historical pace, with a significant portion flowing through intermediaries in Asia and the Middle East, largely unreported. The short-term price action and what's actually moving through sovereign channels are telling two very different stories right now. Japan is the clearest signal in the international scan right now. EWJ is up nearly 15% for the year. Corporate governance reform and AI infrastructure build-out are driving a real re-rating of that market. The one structural check for unhedged USD investors. Yen appreciation eats into returns when you convert back to dollars, so that's the risk sitting on the position. Broader developed international exposure through EFA is holding a more measured posture compared to Japan's move. Crypto's readout is one of the clearest calls in the scan. Bitcoin is in a confirmed bear trend. June closed out with Bitcoin down 21%, one of the worst monthly prints in this cycle. Today's intraday bounce rallied price right up to the 20-day moving average, and then it stalled out. That's the pattern in a bear market. Rallies get sold into resistance. The key structural level the system's tracking is the 300-week moving average, which is the next meaningful test if sellers stay in control. The scan just ran through the full universe and shortlisted 103 symbols in today's Best of Best. Those filters are what cut the noise. Relative strength, momentum, trend alignment across the board. What comes out the other side? XLI in industrials, KRE in regional banking, and ANET in networking. Those are the names that cleared every level of the filter stack. The sector rankings show an interesting split today. Industrials XLI holds the #1 spot and closed higher on the session. Real estate XLRE comes in at #3 and also posted a gain. Technology XLK is ranked #2, despite finishing down nearly 3%. The system's weighting structural momentum across a broader time frame, not just today's candle. Chips pulling back are dragging the sector's daily return, but the underlying structure is what keeps tech in the top 3. KRE, the SPDRS&P Regional Banking ETF, is the #1 ranked ETF out of the full Best of Best shortlist. It pulled back on the session, which isn't unusual in a name that's been building structural positioning over a longer time frame. The ranking methodology weights trend, relative strength, and momentum across multiple look-back windows, not just the last candle. KRE's been on the system's radar as regional banks work through the post-rate cycle reset. Arista Networks ANET is where the stock side scan landed at number 1. Arista builds the networking backbone for AI data centers. It's one of the more structural names in the AI infrastructure build-out. The stock pulled back sharply on the session alongside the broader tech sell-off, but the best of best methodology isn't chasing today's candle. ANET sits at the top of the ranking based on where it is structurally, and that's what the system flagged. Here's the day's final readout. The headline was a chip-led sell-off. The worst two-day drop for semis since last October, dragging the NASDAQ lower while the SPX held up and printed an unconfirmed bearish setup. On the macro side, the long end is firming with the 30-year yield back near 5%. Bitcoin confirmed its bear trend, with a brutal June behind it. Japan's EWJ was the standout in internationals, and Best of Best closed with KRE as the top ETF and ANET as the top stock. Verify both live in SignalFinder Pro. And remember, this is educational content, not financial advice. Do your own homework.